Ever wanted to invest in the stock market, but felt totally lost? Too many choices, too much jargon. Don't worry, today we're making it super simple. We're talking about index funds, the easiest, smartest way for beginners to start investing. Welcome to Primate Finance, where even a monkey can understand money. Quick disclaimer, this is educational, not financial advice. What is an index fund? Think of it like a fruit basket. Instead of buying just one fruit, like only apples, you get a basket with apples, bananas, oranges, and more. If one fruit goes bad, you've still got plenty of others to enjoy. That's exactly how an index fund works. Instead of buying one company's stock, you buy a whole group of companies at once. What does index mean? In the stock market, an index is just a list that tracks a bunch of companies. The most famous one? The S&P 500. It's like the Hall of Fame of 500 of the biggest companies in America. Apple, Microsoft, Google, Amazon, you name it. By owning an index fund, you basically own a little piece of all of them. How index funds adjust automatically. Here's something cool. Indexes aren't frozen. Companies can be added or removed depending on how they perform. So your fruit basket always stays fresh. And the best part? Index funds update automatically. No human picking stocks, just an algorithm doing the work for cheap. Passive versus active, why it's cheaper. Most mutual funds hire expensive managers to guess which stocks will win. Problem? Most of them still fail to beat index funds. Index funds are different. They're passive, no stock picking, no extra drama, just quietly mirroring the market at a fraction of the cost. Benefits of index funds. Reason number one, low fees. Some funds charge as little as 0.02%. That means on $1,000, you might pay just 20 cents a year. Crazy cheap. Reason number two, diversification. Instead of putting all your bananas in one basket, you spread them across hundreds of companies. If one flops, the others keep you balanced. Reason number three, strong long-term returns. The S&P 500 has averaged about 8 to 10% per year over the last century. That's the power of growth plus compound interest. Compound interest, example. Check this out. Invest $1,000 at 8% a year. In 30 years, that's over $10,000. Now add $200 every month. Suddenly, you're looking at around $310,000 after 30 years. That's how ordinary monkeys, investors, become banana millionaires. Types of index funds. Not all index funds are the same. U.S. funds, like the S&P 500 or NASDAQ 100. Big, well-known companies. Small cap funds, riskier but can grow faster, like young monkeys climbing higher. International funds, exposure to global markets, Europe, Japan, even emerging economies like India or Brazil. Sector funds, focused on one area like tech, healthcare, or energy. Riskier, but more specific. Who creates them? Big players like Vanguard, Fidelity, and BlackRock create and manage these funds. They do the rebalancing, so you don't have to lift a finger. Dividends, reinvest or cash out. When companies inside your index fund make profits, you may get dividends. Two options. Accumulation funds reinvest them automatically. Great for long-term growth. Distribution funds pay them out in cash. Nice if you want income now, but you'll pay taxes sooner. Index funds versus ETFs. Important. Index funds aren't the same as ETFs. Index funds trade at the end of the day at net asset value and AV. ETFs trade instantly, just like stocks. Both can track the same index, but ETFs give you more flexibility. Strategy, dollar cost averaging. Instead of dumping all your bananas in one go, invest little by little, consistently. That way you don't care if the market is up or down. You're always stacking. Over time, this smooths out the bumps and keeps you in the game. Index funds are one of the easiest, safest, and smartest ways for beginners to grow wealth over the long run. Low fees, built-in diversification, and the magic of compound interest. You don't need to be a Wall Street genius, just consistent and patient. If you found this helpful, smash that like button, subscribe to Primate Finance, and share with a friend who needs to start investing today. See you in the next Jungle Money lesson.